I mean, I would take profits on today's gains because if you look at the company, we're in finally a negative comp period for KORS. The brand has fallen out of favor. They're talking about wholesale pressure. That's half of their business. That is just starting to decline. So watch out for that. When these stories fall out of favor, a fashion story, operating margins go from 30 to mid-20s down to 20. We're not there yet.
So, Rick, you've been cautious on KORS for quite some time. You got a hold rating and a $42 price target. So what happens here now that the best days are behind it potentially when it comes to things like comps? And as Stacey had mentioned, maybe the fashion edge is lost for now.
Well, in terms of comps, as she said, we've got negative comps, we've got declining growth, compressing margins. That's not typically something that we want to be invested in. On the fashion side, there's a whole lot of sameness out there, and I think consumers are getting tired of the same handbags, and I think money is moving back into apparel from handbags. So
what do you need to see at KORS in order to make you think that things could be turned around?
I need to see, the first thing I need to see is when I walk the stores, I need to see fewer markdowns. We haven't seen that yet. We've seen more and more and more progressively. I need to see comps start to turn positive. One of those metrics has to start to turn positive.
Stacey, no worries. Is this a troubled company, or is it just literally a fast growth company that commanded a high market multiple that no longer deserves that multiple? It's still a good company, but it has to find the right price in terms of the stock, not the handbags.
Exactly. So you look at the stock and you say, okay, it looks like it's trading 10 times, but it's not, because again, we're just starting the margin compression here. And second of all, the company has said, you know, we don't really want to promote, we don't want to damage the brand, so we're not going to play in the promotional game, which to me means market share losses are just starting. And finally, while everybody's still excited about the European piece of the puzzle, it's almost 20% of the business. I would argue, spending so much time in the UK as I do, that the brand there is really starting to hit the wall. So nobody's even factoring in that part of the story.